Welcome to the Crypto Layer HQ. Today we will be covering possible paths for the bear market in 2026. So as we have already established, October 2026 is a very likely point where we will bottom based on our last cycles. We can see in 2018, it took approximately 364 days, let's say, to go from the top to the bottom. And also the bear market in 2022, it took approximately 365 days. So we can see both bear markets lasted the exact same amount of time, about 1 year, 365 days. And if we look from the current top, we can see 365 days would take us to October 7, 2026. So October 7, 2026, if we mark that down, we can see that is about there. And we have already gone through 137 days, which means we have another 228 days approximately to get to around when the bottom will happen. This is assuming we have similar bear markets to the previous bear markets we have had. Now, possible paths on how we could get there. So we can see that we clearly had a big consolidation zone here back in 2024, where we spent a lot of time just consolidating we spent almost a full year consolidating, a bit less, 251 days. We just went essentially sideways in the 60K region. So we can draw a support, which was around 55K, and resistance was around 71K. So this was definitely a big zone where that was consolidating and lots of buyers and sellers were in this region before we eventually broke out. If we look back in the previous bull market, we can also see this was a zone where we did end up going to and mark the top, and we did consolidate a good amount of time in this area as well. So this is definitely a very important zone where there's definitely a lot of buyers and sellers, and there's a lot of indecisiveness in this region, which means it's probably going to act as a zone where we do spend a significant amount of time this bear market. So I do see us spending a good amount of time in the 60s region, maybe even mid 50s. So we could end up having something like this consolidation zone if we do a overlay. Let's say we end up having something like this, and then eventually in October, maybe we end up going lower into the 40s where we find a bottom, and then eventually start to pick up, and hopefully in 2027 we can start our bull run. So this is definitely one way that the bear market could end up playing out, and this is a very plausible way since it would cause a lot of boredom and a lot of people just capitulating and selling their Bitcoin since nothing is happening and they want to get returns on other assets. For example, gold is continuing to rally. You can see today we had another quite significant green day. Even silver had another big green day. So definitely as people start to look into other assets that they see continue to rally, they're going to start to get bored of their Bitcoin and eventually sell. This is called time-based capitulation. So this is very likely to happen. We can also see that another way things could play out is we're going into March soon, and we can see in March we had some strength. We can see we rallied in March about 26%, which is pretty significant. And even in 2018, in March time, we can see we rallied into March, and this was a pretty significant bounce. This time it was 94%. So we do oftentimes get some strength going into March. So we could end up testing potentially the 71K zone coming up in March, something like that. Or maybe we end up going higher, get people bullish again, and end up potentially even going into the 80s. And if we do end up going that high, I do expect that we will end up failing. And if we do get a fail from that zone and end up back into the 60s, that will cause a lot of demoralization since everyone who has been calling for a super cycle and saying that we're going to get a recovery and the low is in, once they see that we fail at 80 and we end up back in the 60s, that will cause a lot more capitulation, and definitely people who would have bought in the 80s will end up selling, and then we could end up going significantly lower a lot faster, maybe back into the 50s zone, and then eventually bouncing and consolidating. So this is definitely another way I could see things playing out. I think what's more important, instead of trying to predict an exact path, is knowing what the most likely support and resistance zones are. And it is pretty clear that the 70K region, which is here, since it was a big resistance level here, and even the 80K region is also a big level. So I think these are going to act as very strong resistance levels this entire bear market. We can even see that's where we wicked here in November 2025 and bounced off, and even it held as support back in March and April of 2025. So definitely 80K is a big psychological level and a big support, and now going to be resistance level, as well as the 70K. So these are definitely clear resistance levels. And then in terms of support levels, we can see that definitely the 50K region was a big support level, since it was where we wicked down to in August of 2024, and even we consolidated here. When we broke out of this consolidation zone, we then retested the 50K and then started our next rally up. So we can see 50K is definitely going to end up being a strong support zone. Even if we look back in 2021 and 2022, we can see that many times Bitcoin went to 50K, got rejected, and then eventually broke through. And then we tested it again in December of 2021, rejected, and many times it held as support in 2021 in the tops here. So definitely, I would say 50K, 70K, and 80K are key levels. 70 and 80K, of course, as big resistance levels, and 50K as big support levels. Of course, 60K, definitely another big level, since this was also holding as a big level in 2024 when we were consolidating. We can see in May 2024 it bounced off it, and even in June 2024 it was holding, and then even in September 2024 rejected, then held again as support in October 2024 before we started to rally. So definitely these are big psychological levels that are going to act as resistance and support zones. So keep an eye on them, and once we do end up potentially retesting 80K and rejecting, or maybe even just testing the 70K and rejecting, next zones to keep an eye on will be the 60K. If the 60K doesn't hold, we could end up going to the 50K region pretty quickly. And if we look at the 200-week simple moving average, it's starting to approach the 60K region. So 60K is going to be a very big level to watch, since it's not only a big support level, it is also the 200-week simple moving average. So that could end up being a big support zone. So potentially we could end up going down to 60K, which is a big psychological level and a big support from the past. And also it's going to be where the 200-week simple moving average is. And then maybe we then end up getting a bigger bounce, and maybe even revisiting the high 70s, potentially even the 80s, and then maybe getting a final larger rejection and just slowly bleeding into October 2026, where we eventually start to consolidate for longer, potentially hold, and then in 2027 start our bull market. So I think these are some very likely paths and what to expect in the 2026 bear market. Of course, expect anything, but these are my most likely paths for how I think things will play out. Keep in mind, we could also definitely go lower, since from the top to 50K, that would be a 60% drop. And if we look at last cycle, if we look at the bear market in 2018, we can see from the top to the bottom was about 84% drawdown. And then last cycle from top to bottom was a 77% drawdown. So from 84 to 77, that's about a 7% smaller drawdown. So from 77%, if we minus another 7%, that would take us to 70% drawdown. So from the top, if we get a 70% drawdown, that would take us to 37K. So we can draw 37K here, and that would potentially be the max drawdown where we could end up going. So of course, if we do end up not being able to hold, so let's say we end up going to 50s, maybe bouncing, 60K fails, and we do end up breaking 50K, we could end up eventually going to the high 30s or low 40s, since that would be from the top a 66 to 70% drawdown, which is what we would expect based on diminishing returns and previous cycle drawdowns. And that would also bring us to approximately, if the 200-week simple moving average is around 60K, that will take us to about 35% below the 200-week simple moving average. If we look at last cycle, from the 200-week simple moving average to the bottom, we had about a 35% drawdown. So it would be similar to last cycle. From 60K, 35% down would also take us to about 38K. So I think if we're at 38K in October, that would be a very good signal to start to definitely seriously start to enter the market and deploy as much as you plan on deploying into Bitcoin. Of course, keeping some on the side just in case we go lower, but definitely it would be a very nice point to enter, since it would be a 70% drawdown, which is essentially what we would expect based on diminishing returns and previous cycle drawdowns. So definitely, I wouldn't keep all your cash on the side waiting for 38K, but definitely if we're in the 40s and we start to approach the low 40s and high 30s, definitely it would be a place to start to look to get a bit more aggressive if you're DCAing or plan on lump summing into the market. I will continue to make these videos as things play out, as I think as we get more price action in the next few months, it's going to be very telling in terms of how things might play out.